Now let me demonstrate the difference between the method 1 versus method 2 via certain assumed example and via certain assumed numbers. So to do this, we will take help of some Excel sheets. So let me take this up. I will prepare the example fresh in front of you so that you understand where the numbers are coming from. Okay. Let us take a cost. Let us say the C cost of a particular asset is at least this much. Okay, let me take this one also fresh. So let us say cost of an asset is a 40 lakh rupees. Let us say useful life of an asset is 6 years. Let us say salvage value is, let's say, 10 lakh rupees, and that's it. These three numbers are coming from my first stage when you are acquiring the asset. Now these numbers are known. Now I have two methods to pick from. I have a method called SLM, and I have a method called WDV. I want to contrast. My objective is to contrast these two methods. So let us do it today. So as we mentioned that in SLM, we calculate something which is called a depreciation amount. So we want to calculate depreciation amount. Now how do we calculate this? We calculate C, that is cost minus salvage value, that is our depreciable amount, divided by N. This becomes our depreciation in per period. So if we are providing straight line depreciation, then in year 1, 2, 3, 4, and so on, in year 1, 2, 3, 4, 5, and 6, we will provide this much of depreciation, and we will have this much of closing book value. I'll also call something as accumulated depreciation, and then we have closing book value. Okay. So let us calculate this under method SLM. I'll just give it color coding. So let's give color coding code blue to WDV, and let's say some other random color to this SLM method. Let's say code yellow. So the first year depreciation, in fact, all the years depreciation is going to be same in this method. It is going to be frozen. So I'll freeze this cell. Let me drag this now. So depreciation under SLM is going to be exactly same in all the years. What is going to be my closing book value? My closing book value will be going to be in the first year. I bought a machinery or whatever asset for 40 lakh rupees, and I have subtracted depreciation of 5 lakh. So I will say in my financial statement, in my balance sheet, that I am left with only 35 lakh worth of asset. That is what closing book value here means. And in second year, what will I say? In second year, I will say that I started with 35, but 5 is used up in this year. So what am I left with? I am left with 30, and so on and so forth. Now you notice that at the end of 6-year period, you are left with the salvage value in the form of book value at the end of 6 years. One more thing I want all of you to notice is that if I sum this number, what should be the summation? The summation should always be equal to depreciable amount. Why? Because that is what you want to do in depreciation. That you want to say that over the 6-year period, I have used up 30 lakh rupees. So I want to spread it in form of depreciation. That's what depreciation means. So that is why the summation of all the depreciation needs to be exactly equal to depreciable amount that we have just verified in this method now. Let us call this method yellow, or method SLM. Now this much we have already done. The only concept I want to introduce is, you may have already seen this term in the pre-made portion when you were practicing some of the question, but today I'll define it. Accumulated depreciation. Now what is accumulated depreciation? Simply what it means, what it says. It is depreciation on that particular asset accumulated so far. So in the first year, I have provided only 5 lakh of depreciation. In second year, the total depreciation on this on this particular asset is 5 lakh we have provided so far, and 5 more we have provided in this year. In third year, how much will be the accumulated depreciation? It will go up to 15, then so on and so forth. It will continue to go up and at the last value of accumulated depreciation should also be equal to depreciable amount. Okay, now why this is needed, what do we do with this, that I will explain to you in a bit. Okay, accumulated depreciation. Now we have closing book value here. Now the main reason of this exercise was to contrast this, that how the same things would have looked if we would have adopted a different method called a WDV. So let us use the numbers. In WDV, what we said is that here we need to not calculate the depreciation amount, but rather we need to calculate the rate of depreciation. How do we do this? We have a formula. Formula is 1 minus nth root of SV divided by C. So this is SV divided by C. I want to find nth root of this. So nth root, how do we find nth root? 1 by n. You guys know, you guys have attended some basics of Excel classes. So this much formula is good. Okay. Now this is the percentage. Now basically this calculation shows that only if you depreciate the asset at the rate of 20.63% every period, then we would have reduced 40 lakh to 10 lakh over 6-year period. If you take any other depreciation method, then it will be either more or less depending on what rate you took. So that is why the only depreciation rate that we want is 20.63%. So now in this, after we have calculated this, let us calculate depreciation, accumulated depreciation, and closing book value. Let us do this. So once again, year 1, 2, 3, 4, 5, and 6. Now, as we discussed in the definition of the method, this time the rate is going to be constant and not the amount. So how we will calculate depreciation in the first period? It is going to be 20.63% of cost. So we have shown a depreciation amount of, let me change the formatting a little bit. Okay, 8.3 lakh rupees. Now how much will be the closing book value? You started with 40 and you showed this much of depreciation. So closing book value will be 31.7. Now notice how much will we provide in the second year. In the second year, we will provide depreciation on this number, 31.7. But the rate will remain same. So rate is this one. Let me freeze the rate. 20.63 multiplied by whatever was the closing value in the last year. That becomes my opening value. So on 31.7, I will provide 20% once again, 20 point something percent. Now I can drag this down. This one will be my depreciation and my closing book value will be my opening book value minus this year's depreciation. Jitna पिछले साल बचा था उसमें whatever I have depreciated this year, that will be my closing book value in this year. So let us drag this one as well. Now you see that via this channel we have started with 40. We kept on reducing the remaining value by 20.63% year after year after year, and over 6-year period we have reduced it exactly equal to the salvage value. Questions? Okay. Now let us. Yeah. Go ahead.
Just one question. Whether there is any preferability between these two chapters, or is like just about how the consistency is maintained? That's it.
We will see this. We will see this after we have learned the method. What difference does it mean? Is it only that one is this method and one is another method, or does it make any difference in the way our income statement and balance sheet looks? That is when we will try to understand that which method is more suitable in which situation. Okay, so we will do a debate about this. That's what you want to ask?
Yes. Yeah. Cool.
Which method is suitable? How do we apply, or how do we pick this method versus that method? That we will be able to debate only when we have seen the repercussions of both these methods. So let us understand the repercussions of these methods. For this, I will pose a question to the class. Let us say there are two companies, company A and B. Both of them have exactly same performance, the operating performance. But the only difference is company A chose SLM method and company B chose WDV method. Can you tell us that whether the profit or loss of these companies will be equal, or will one be more than the other? In what way will the profitability look like?
So for the company A, the profitability will look higher in the beginning, and for B, it will look higher in the end.
Yes, beginning and the end. Basically, things are reversing. So basically, what he did is he simply compared this depreciation money. Depreciation is the expense. It will go as an expense in the income statement. So if it was company A in the beginning, in the first few years of the asset usage, company A would be showing only 5 lakh of depreciation, whereas for the same event, company B is showing 8.3 lakh of an expense. So obviously in the first year, company B's profit will look smaller as compared to A. Whereas if you look at the last few years, then this thing is reversing. That the company A continues to charge 5 lakh rupees, where company B is charging only 2.6 lakh rupees as depreciation. So if the performance was same, then company B's profit will look to be bigger number and company A's profit will look to be a smaller number. That is first interpretation that I want all of you to notice. Now, second interpretation. When does this reversal happen? Things have reversed, right? First few years, A was showing better performance. Second few years, last few years, B is showing some better performance. When will it reverse? When is the crossover?
So it reverses when this depreciation value, this 5.2, somewhere around where the depreciation becomes 5.2. We can calculate at which year it is happening using the same formula and put it. Yes.
So the reversal will typically happen somewhere very close to the middle of the life of the asset. Let me show you. Let me insert a chart for this so that you can understand what am I talking about. So let us insert a chart and let us take some data. क्या ले लिया इसने? Okay, no, we don't want closing book value. Let us select data. So remove this one. I want to add. So series name is SLM, and I want to plot the depreciation values here. Okay, and then I need to add one more. This time the series name is WDV, and I want to plot the values of depreciation again. So now you see the comparison between a WDV depreciation versus an SLM depreciation. Wherein in the first half of the asset usage, the WDV depreciation expense is higher as compared to SLM. But WDV not only falls, it keeps on falling, and because of that, in the later half of the usage of the asset, the value of depreciation under WDV changes, it reduces below the level of SLM. So let us say there are two companies, company A and B, that have approached to you for, let's say, loan, and both of them are showing a profit of, let us say, 50 lakh rupees. They have said that company A is using SLM and company B is using WDV. Which one would you give loan to if, let us say, all the other criteria, they were exactly same? Is the question clear to everybody? I'll repeat. Let us say you are the lending manager and two companies have approached you. First of all, would you give loan to the more profitable company or less profitable company?
More profitable.
More profitable.
Okay, I think at least up till there we are on the same page, because your concern is that you want to make sure that your money comes back to you. Okay, let us say it is exclusive, that you have only one person to give the loan to, only one company to give the loan to. Then company A is also reporting we have made a profit of 50 lakh. Company B is also reporting we have made a profit of 50 lakh. In all other respects also they are same. The only point of difference is company A is using SLM versus B is using WDV. Which one will get the loan? Tell me.
First we will ask what means where in the time period they fall.
Okay, they will say that it has been 7 years since our inception. Then
No, means total means if see here there is 6. So after 3 years, if it is coming then, and if they are showing the WDV method, means major part of the depreciation they have covered. Now they are covering only small, means their profit are huge if as compared to
Fine,
that.
Vipin, understood that you have seen the chart close enough, but ask me a question. I am the owner. Ask me a question that I can answer.
So what is the expected life of your assets?
Let us say it is 12 years then.
And how many years has it been since you purchased them?
Let us say it has been 7 years then.
Then you're in the second half. So I'll consider the
SLM1.
SLM1, which is following this.
Okay, everybody is able to get at least what they are arguing. Now I want anybody, if you can think of counter argument. Is there any flaw in their argument?
Sir, this is all managerial discretion at the end, so depends at what rate you'll be selling your final asset to give the
Okay. So he's saying that you may have sold some of the asset. Okay, fine. Anything else? Yeah, Bhavya, go ahead.
So, sir, if we are WDV, we have already depreciated a lot of our assets. So we might not have the capability to pay back now. I mean, we have already incurred a lot of expense.
No. See, that's what I wanted to show you, that this is not payment. When you are showing, let's say 8 lakh of depreciation versus 5 lakh of depreciation, it has nothing to do with the payment. It is just the timing of when you are showing it, right? So it has nothing to do with the payment. Okay, Vidhi, go ahead.
So depreciation is basically like we have accumulated that amount of profit to our.
Vidhi, I'm sorry to interrupt you. Rest of the people, could you understand the question I'm posing? Is the question clear to everybody? Okay, fine. Please go ahead, Vidhi.
Yeah, so we have accumulated that amount of profit. So in WDV, what happens is the accumulation is faster. Like it's more in the initial years and less in the later years. And in SLM, it's constant like throughout every year.
Fair enough. Then-
Yeah. Also, it's better like in if I have a firm with only differences that one person is charging SLM and the other person is charging WDV, I would assume that the person charging WDV has more accumulation towards the machinery, and if that is the only criteria I need to determine, so I'll go with WDV.
Okay. Any other opinion? Anybody else?
Sir, I don't think there could be any difference between WDV and SLM because it's just accumulation till the end of the lifetime.
Okay. But one is showing a 50 lakh of profit and other is also showing a 50 lakh of reported profit.
Depreciation end of the day is just accumulation, right? I mean, the accumulation of just 30 lakhs. That's all. That's the depreciation.
Okay. I think some concepts are missing here. Basically, let us say a revenue of 1 crore rupees minus COGS of, let us say, 30 lakh rupees and minus depreciation of 20 lakh rupees. And you are showing a 50 lakh of profit. Versus for the same particular company, let us say somebody has 120 crore rupees of COGS, only 30 rupees of, let's say, 120 crore rupees of sales, 30 crore rupees minus 30 crore of COGS and minus 50 of depreciation. And then you are showing, oh no, something is different. Yeah, that's okay. Actually, 40, right? How will it show 50?
Yes, sir, 40.
Yeah. Now what we are saying here is that if let us say this difference of 20 versus 40 is only because of the method of depreciation, then could you not deduce that this company is doing better? Company B is doing better, right? But I was asking that there is a catch to this. Okay, yeah, go ahead, Mayank.
Can we say that WDM is in a way a better way of depreciating because that way?
Debate में नहीं जा रहे हैं भाई. I'm not at all debating that which method is better. I'm asking that two people have reported this much. We will go formally on this debate that which method is better later on. Right now, just we are trying to understand that what difference does it make in the first place? Does it make any difference? Yes, it does. this is what difference does it makes, that you have shown a 20 lakh of expense versus somebody else is showing a 40 lakh of expense. That means if both of you are showing same profit, that means the one which is showing a higher amount of depreciation must be performing better. That even after charging a hefty amount as a depreciation, they're still arriving at same amount of profit. But my question was that, let's say there are two people who have reported this much of a profit. Then what sort of question will you ask them, and how will you decide that which company's performance is better or worse? We have seen so far that if they are in the first half of the usage of the asset, then the one which would be using a more aggressive method called WDV is showing a better profit, a better performance. Whereas if you were in the second half of the asset usage, you would be reversing your opinion that the one which is using SLM must be doing somewhat better than the one which is using.
They write it down in the
Now,
report.
one thing,
I think they write it down in the reports which method they have used.
No, I'm saying that they have mentioned it, that one is using SLM, one is using WDV. The
So-
point here is pretty simple. Okay, I'll just answer it not.
Depends on the initial amount, right? If it's the same or not.
accumulation उस point तक कितना हुआ depreciation का?
Okay, fine. You guys are just wandering everywhere. It depends upon what stage of lifestyle the companies are on. Basically, if the companies are in a growing phase, then they will keep on accumulating more and more and more assets. Is there anybody who told you that all the assets were purchased on the first day and after that no asset was purchased? Right? So if the companies are in a growing phase of the business, then the one which is using a more aggressive depreciation method, of course, has their profits understated because they are charging much of a bulk in form of depreciation. Versus those which are using SLM in the same situation. Whereas if you are in the stage of stagnancy or decline, if in those situations when you are not accumulating too much of an asset and all the assets are pretty old, that means you would have moved to the second half of the asset usage. And that is when your inference will reverse, that the one which is using SLM must be doing much better than compared to the one which is using WDV if they are both reporting same amount of profits. Ye samajh aaya?
Yes, sir.
Yeah. So keep it in mind that in general, the businesses keep accumulating the assets over a period of time. It's not that every asset gets accumulated right in the beginning and then no purchase anything further. Okay, so this is how you are going to compare the impact of SLM versus WDV. So theoretically speaking, you want to find out that what stage of asset usage they are on. How would you find that out?
also asking the management could be the proper way of like knowing which stage the asset is in.
Yes, you can ask them, but they wouldn't know. Means they can tell you on an average, but yeah, fine. If the management are giving you this answer, then perfect, not at all a problem. But in general, you will always have at least this much understanding available that are they in the initial phases of their life of the business? Are they growing? Are they accumulating more and more and more of the assets, or have they stagnated or have they started to decline? That is even simpler to get. Okay. That is about the income statement numbers comparison, that you want to find out that which phase of the life of the asset they are in. How will you compare the balance sheet numbers? Let us say two companies, once again, companies X and Y. Once again, let us say you are the lending manager and you have asked that how much of all the other details, and the only criteria left is that how much of total assets they have. Company X is reporting that they have 500 crore of resources, assets, and company Y is also reporting that they have 500 crore of assets. And then you got to know that company X is using SLM and company Y is using WDV. Let us say as a lending manager, the only difference is this one. Now, which company would you say is better and which company is worse? Can you say something about this? Before I open it up for the opinion, is the question clear to everybody? Okay.
सर ये 500 उस समय का है कि मतलब शुरू का है, शुरू से?
No, right. बैलेंस शीट नंबर कहाँ से मिलता है यार, ऐसा क्यों होता है?
अच्छा सॉरी समझ गया.
Balance sheet is always available at that point of time. So right now I inquired the balance sheet from both of these guys. They have both reported these numbers, and my criteria is of course that whichever business has Higher asset I'm going to prefer, or lower asset I'm going to prefer as a lending manager? किसको लोन दूंगा? अनुषा किसको लोन दोगी? जिसके हायर असेट होंगे उसको दोगी कि जिसके कम होंगे उसको दोगी?
I think, sir, again we'll have to ask the same question.
Which one?
That how long they have been accumulating.
Pretty long. Then?
Then.
No, first of all, I'm asking a much simpler question. That would you prefer a business which has a larger asset base to give the loan, or a lower asset base to give the loan? किसको दोगी loan?
Larger asset base.
Okay, fair enough. Now give your opinion. That is there any commentary that we can talk about SLM versus WDV? That would you prefer in this case X or Y? Let us say they are in the case one, they are in the initial phases, they are both growing companies. Then which one will you prefer?
Then WDV, because
okay, fair
that
enough.
means that
And let us say both of them are declining. That let us say just 4 or 5 more years, and then they would almost start to wind up. Which company has a better asset position?
then in that case SLM.
Okay. Anybody who wants to say anything else? Vidhi, go ahead.
Sir, I think WDV in both the cases.
Okay. Anybody
Because-
else? Okay, go ahead.
Yes, sir.
Yeah, Vishal, batao bhai. Baki log se.
Sir, the case will be reversed, like what Anusha says. Like it will be what Anusha says. Yeah. Just a minute, just how the chart says. Yeah.
Okay, fine.
Reverse of that.
So the way things are reversing in the middle of the life of the asset for income statement numbers, the same thing reversal will happen to the balance sheet numbers is what we are saying.
Yes, sir. Yeah. Right. Same.
Let me show it to you. Vidhi, I got your answer, but let me show it to you rest of the class. Basically, this is how things will behave as far as the balance sheet numbers are concerned. What value will go in the balance sheet? The closing book values will go in the balance sheet. Okay. So let me select the data and select closing book values here. So let me select, zoom out a little bit so that I can change the data. So this is how the book value will behave in the straight line method. I think from diagram 1 on diagram 2, you would have gotten the reason why a straight line method is called a straight line method. Let me show it to you now. ये सब डिलीट कैसे होंगे? I think I have an easier way out. Yeah. Now can you see what is happening to the book value of the assets? Book value is never traversing. It is not like this. It is always the case that in case of WDV, the book value will always be lower than that of SLM. It is almost like, let us say 2 people started a race. One is starting with a same speed. One is starting with a very high speed, but the speed is consistently falling down. And they are both reaching at the destination at the same time. Then will they ever cross each other? Let us say there is a race and we are saying that one maintained the same speed throughout. One started with a completely different speed, and that there is a constant change in the speed. And then they are both reaching at the end point at the same time. Then will they ever cross? No, at max they will just meet at the last moment. That's what is happening here in the balance sheet. That at any given point of time, you are charging higher depreciation in case of WDV. So for that, even by the reduced numbers, you will never reverse this as far as the balance sheet positions are concerned. Balance sheet position is just playing a catch-up game. And when will it catch up? It will catch up at this last moment. What does it mean? This means to say, so coming back to Vidhi's comment earlier, that in balance sheet, the WDV will always be understated number as compared to an SLM for same performance. That means if both of them are reporting a 500 crore rupees of asset, that must have meant that the one which is using WDV in real senses has much bigger asset position as compared to the one which is using SLM. ये last conclusion समझ आया? So very important for all of you to keep it in mind that when you are comparing WDV versus SLM or depreciation method 1 versus 2, the income statement numbers reverse in the middle life of the asset, but balance sheet numbers never reverse. They always remain in one particular direction. Okay? Any questions? Okay, perfect. So let us continue with our last bit of discussion that we wanted to tell you. No classes after this now. So just give me 2 minutes. So the one part that I had promised to you earlier on, I will quickly do it now. So let us say you have an asset of something like this. Or let me do it tomorrow, no problem. Just remind me that this example was missing on in the last class. That what is the impact on the way the profitability looks over the period. Okay, so for that I wanted to create one example that I will show it to you today. Sorry, tomorrow. Okay.
Can you just repeat the last statement?
Yes, basically the statement I made was that if I create 2 charts, let me create 2 charts for you to consider. So control दबा के करते हैं ना. Okay. Here what I will do is that I will select the depreciation number. Now I want you to compare this chart 1 versus chart 2. In chart 1 you have the depreciation numbers. Give me a moment.
इसका size reduce कर दीजिए chart का.
Sorry, come again.
I was saying the same thing कि chart का area reduce कर दीजिए. That's it.
Okay. Zoom out भी कर सकते हैं, not at all a problem. Okay. Basically, this is how the depreciation amount is going to behave over the years, and this is how the book value of the asset is going to behave over the years. I wanted you all to notice that in the first half of the asset usage, the depreciation amount behaves differently as compared to the second half of the asset usage. That in first half, one method will be showing a higher depreciation as compared to other, and in second half it reverses. And where does depreciation go? Depreciation goes to expense in the form of expense in the income statement, right? And ultimately it will end up showing impacting our profits. Whereas what happens to balance sheet numbers? That is the closing book value. In balance sheet numbers, things are pretty simpler in that sense. That we can straight away say that if the one method which is a more conservative method, which is called a WDV here, how is WDV more conservative? Because it is showing more expenses in the beginning and lesser later on. That means more chunk has been shown in the beginning itself. So as far as the balance sheet numbers are concerned, the method which is more conservative, which is in this example WDV, will always show understated balance sheet figures as compared to SLM method. There, this reversal of midway of the life of the asset never happens. At max, what happens is that at the last point of the asset usage, they catch up. That means if my point of contention between company X and company Y was only that, let's say both of them are showing some amount of, let's say, asset position, and one using SLM and one is using WDV, then I don't need to even bother about asking that what stage of life you are. I know for sure that this one is an understated number. So if understated number is 500 and overstated number is also 500, then definitely in real terms company Y has a bigger asset base. ठीक है? Okay. Questions? Okay, so let me quickly create this example that I wanted to do, wherein I wanted you to see a very peculiar example. So for this, I will change the numbers. I will make the numbers slightly easier. So let me get rid of these. Okay, let's say you have an asset for rupees. I will just use some numbers. I want to change the number of years to 4. Let us say you have an asset for rupees 22 lakhs with a salvage value of 2 lakhs. Okay. Okay. So let us say we have this example that there is an asset which is costing you 22 lakh rupees, which has 4 years of life and 2 lakh of salvage value. Basically, I wanted to know this particular number and these depreciation amount. Let us say you are hired as a manager. Okay, you are hired as a manager of a company, and you know that the company is pretty flat, that there is no improvement in the performance, and you are an unscrupulous manager. Okay. Notice that why am I using this, that the point of this learning is that you don't get fooled. The point of this learning is shouldn't be that you fool somebody else. Okay, so let us say you are unscrupulous manager and you are hired in a company wherein your performance appraisal is due in 4th year. That somebody at this point of time will check how did you perform over past 4 years. If you performed good, then they would want to give you maybe they would want to give you another 10 year and maybe even give you some bonus. If not, then they will fire you. That's the position. And you know from your own experience that business is flat, that you can't push the operations too much. Then how things would look if you use one method versus how things would look if you use another method. Let me quickly demonstrate some this example via certain assumed numbers. Let us say, let me keep for simplicity sales and COGS same for all the years, year 1, year 2, year 3, year 4. Let us say of all the years the sales is 40 lakh rupees. That means you couldn't push the sales up. COGS is 20 lakh rupees. That means operations also you couldn't improve anything. You couldn't reduce the cost. The only difference it is going to make is depreciation. If you are using SLM method, how will we find a depreciation under SLM? So C was 22, salvage value was 2 lakh rupees and N was 4. So my depreciation is what? 20 by 4, that is 5 lakhs per year. So I will show a depreciation amount of 5 lakh in this year, 5 lakh in this year, 5 lakh in this year, and 5 lakh in this year. And how much will I show the profits? I will show that in first year we had a 15 lakh of profit, second year 15 lakh of profit, third year and fourth year also 15 lakh of profit. But you are an over smart manager, you attended accounting classes, so you did something else. You applied a method called a WDV method, wherein instead of this red figures, you applied the depreciation in this manner. First year you charged 9.9, let's call it 10 lakh rupees. 10, then 5.4, then 3, then 1.6. Okay, let me take these numbers. So 10, 5.10 lakh rupees, then 5.4, then 3, and then 1.6. How much is the total of this depreciation? Let's quickly check. Yes, 20 lakhs. Yes. So total depreciation is same. But now how would you show the profit? You would show that in first year, you know what? Our profit was only 40 minus 20 minus this 10. So these are oblique of each other. That either you are showing minus or you are showing this. So 10 lakh of profit in first year. How much profit in the second year?
14.6.
14.6 of profit in second year. Third year?
17.
17 lakh. And fourth year?
18.4.
18.4. Now actually, you know what? Total profits, you haven't shown anything differently. Here also you showed same amount of 15 into 4. That much of profit. If you add these numbers also, you will arrive at the same numbers. But what have you changed is the timing when you are showing them. So when you went to your investor presentation, let us say Anupam and Vidhi are two managers. Anupam is showing this type of chart, that I had earned a profit of 15 in first, second, third and fourth year. But Vidhi is a smart girl. She is showing this one. She is saying that in first year my profit was 10 lakh rupees. Then it went up to 14. Then it went up to 17. Then it went up to 18. If you were a shareholder, who do you think you would give a tenure and bonus, and who would you fire? Psychological, but it happens that even though the total profitability done by both the managers is exactly same, you would say somehow this person is doing better. She is improving the business. Whereas this person has made the business stagnant. So this kind of game is possible by manipulation of methods. So that brings us or opens up with a question that how do we decide which method is more appropriate if you wanted to give a fair picture of the business. So both the methods are not same, that you have seen, that the numbers, the timing also makes a difference. That was the objective of this particular illustration, that just by changing the timing you can change the perception. Now tomorrow we will discuss that which method makes more sense. So before that I will tell you that there are multiple methods out there, but of all those multiple methods we will discuss only 3 main methods which are used more prominently in the real life. One we have already seen, SLM. Other we have already seen, WDV. One more method is called actual production method, or units of production method, or actual usage method also, actual usage method. Any of these names you can see depending upon which book or which platform you read from. So these 2 methods we have already seen. Actual production is pretty simple, that whichever way you have actually used the asset, in that proportion you show the expense. For example, let us say you purchase a coal mine for 500 crore rupees and you think that the coal mine has 5,000 tons of coal. So you have found a depreciation per ton. If in the first year you have excavated no coal, then there is no depreciation. Let us, how much is this number? Depreciation per ton is how much? Half a crore rupees.
10 lakhs.
50 lakhs per ton. Okay, it is 50 lakhs per ton. Let us say in first, sorry,
10 lakhs, no?
10 lakh, I'm so sorry. 10 lakhs per ton. Let us say in first year you have excavated 30 tons. So your depreciation becomes 30 into 10 lakhs. If instead in the first year you have excavated 400 tons, your depreciation is this. So basically whatever is your actual usage, in that proportion you show the depreciation.
Right.
Now in tomorrow's class, what I want all of you to do is that logically think all sort of assets that you can think about, under what situation this one makes more sense, under what situation this one makes more sense, and under what situation this one makes more sense. And we will do a quick debate in tomorrow's class. Okay? Once again, let me repeat. This example was only to show you the impact of difference it makes. Okay? Nothing else. Chali. Bye. See you all tomorrow. Bye.
Thank you, sir. Thank you.
Thank you.
Thank you, sir.